Everyone, welcome to the latest episode of the SaaS Sessions podcast. Today we have Anupam Rastogi on the show with us. Anupam is the general partner at Emergent Ventures, which invests in seed to early scale SaaS companies and more. So Anupam is an investor in companies like Present, Support Logic, and also Incent, by the way, where Arjun was the co-founder of Incent, where he exited to Zoom Info later on. And he was also a guest on the show twice, actually, with two different episodes. Hey, Anupam, such a pleasure to have you on the show. And I gave a very short intro about you, but I know there's more to you and more to what you have done in the SaaS ecosystem. So would love to know more about you from yourself and how's your journey been so far in the SaaS world.
Hey, Sunil. Glad to be here. Thanks for having me on. So in terms of my journey, I started off as an engineer and inventor, studied computer science, worked on a few new products early in my career, then moved into go-to-market and product roles at startups early in my journey, and worked for a couple of startups that eventually had good outcomes. This was in the enterprise software SaaS space, which I've been in for now 20 plus years. And so I've been really fascinated by the go-to-market and getting product market fit, that phase of startups. And got that so much that I wanted to do that with multiple companies. So entered venture with the expectation of doing that and helping multiple founders succeed. And this was about 15 years back. And this then I've been on the darker side, venture side. And I've been involved with a number of journeys now, including a few that have had, IPOs, large M&A exits, failures, everything in between. So I've had the opportunity to learn from a lot of journeys, a lot of founders, partner with a lot of folks. And over the last several years, we've been building Emergent Ventures, which you alluded to. We focus on pre-seed and seed coming in very early, specifically in the enterprise AI cloud infrastructure space, which we have been investing in for 7 years, and partnering with founders very closely on helping them get to product market fit and build out go-to-market. All our companies are US market facing, but we have several companies which are leveraging India as a tech hub, including many that started in India. And so we like that model. We have many companies, name some of them, and many founders who've gone through that journey of building out their go-to-market, getting product market fit, and then on their way to being a much larger scale, high impact company. That's in a nutshell what we do.
Nice. That's a very interesting journey. And I would say, like, again, as you said, being on the dark side, right? Like, you've gotten the chance to speak with so many, like, partner with so many founders and, be a part of their success stories and, learn from their failures as well, right? Like, I'm sure it must be a learning for you as well and which you can apply to a broader scheme of things, like what went wrong, right? What went right? Like, how do you play your cards right and so on. And this, I think, for today's episode, we as we discussed, like, we're going to talk about what are the common challenges or what are the common mistakes or pitfalls that founders typically face when they are setting up the GTM for the US region, right? Like, North America is still a broad one, but trying to focus on just US because somehow it's like the largest market for any category that you pick, right? So let's talk about the common mistakes, right? I know we have discussed like a bunch of those, but starting with, again, I know that you're joining us from the Bay Area, so starting with the number one pitfalls or mistakes or challenges that the founders face, like, should I should one founder move to the US? How much time is too much time? How less time is too less time to spend in the US? How do you go about thinking it? And how do you get started? Like, what's the where to begin, right? Like, if I have to, if any founders who's listening, if they have to answer this question, right? And I'm sure they have this question on their head, but would love to hear your thoughts based on all the founders that I have spoken to. Like, what is the right time to move to the US and why is that important?
Sure, yeah. I think that's a very important and broad question. So let me tackle that. For this content today, I know a lot of your listeners are in the US, India, community in India to US. So I'll focus
Right.
my on that primarily.
Mm,
So it's lots of learning, and I'd say building a SaaS company focused on US market. There's a lot of science and a lot of art, and
mm,
science are things which are repeatable and things that you can learn from others and pick what has worked, what is not. And art, what I'm calling art, are things which are maybe specific to your business, which need to be innovated upon, and you need to come up with a creative solution to it.
mm,
And especially in driving PMF, building out GTM, a lot of important things in life comes to the right mix of science and art. So I think it's really important to understand the science part, which is
mm,
what is not. But then you have to apply the layer for the things that are maybe 80%, 90% of the thing. There's actually a lot of science around it. So you have to know that well as a founder, get to understand that quickly in the early days. And there are things around, a lot of things around this product market fit, market discovery, building products, finding customers, who to hire, when to hire, sales, marketing, how to fundraise. A lot of those things have a fair bit of science around them. So understand the science first. And for the remaining 10 or 20%, which is
mm,
different and unique. So identifying that which parts you can take from someone's playbook
mm,
and call it the science or the playbook, and which parts you have to innovate on, that
mm,
becomes really, and I often work with founders, and often it's hard to find the balance right. Sometimes the founders are trying to apply too much science and trying to do 100% of the things the way that has worked for others, and
mm.
that are just not working for them. In many other cases, someone is trying to just reinvent the wheel from scratch. You're trying to build a
Right.
new car, and now you're saying, I'm going to build the tires, and then I'm going to build the valves in the tires, and I'm going to reinvent how rubber is made and how tubes are made before I start to build my car. That gets, you lose a lot of time in that. So I'd
Mm,
say learning, if I could just take one meta learning, is, just picking up all the learnings very quickly in the early days, which we've seen a lot of the best founders are amazing at that. Within a few months of their journey, even if they're first time founders, they have imbibed so much that they know,
mm,
talking to a lot of people, they've picked the right, let's say, partners, whether it's investors or they've surrounded themselves with a few advisors or mentors, where
mm.
the parts of the playbook, and then they are going and then expanding that to create their own playbook. That's probably one overarching thing. And then happy to double click and dive into some of the other questions like when to move and some of those parts of it.
Right. Right. No, I think you brought up very interesting topics, and I'm sure like these are overly discussed on like a lot of other podcasts and like videos and in-person sessions and events and whatnot. But somehow there's never a right or wrong answer, right? It's always about perspective on, and it's very subjective to each person, each industry, each the situation or environment. You cannot generalize such things, right? Like you mentioned, like it's art and science, right? Science, maybe you can still generalize. You can like take average and say that okay, this is the best possible case. But when it comes to art, right, like some people like abstract, some people like dynamic, some people like something else, right? So it's very subjective in that manner. And I think this question about like when is the right time to move, right? It's also in that sense, right? Like
Yeah.
depending on it depends, right? You can answer it this way, like it depends. But would love to hear from you, like what are the usual positives that you have seen? Like, hey, somebody has moved right at X stage, and that has always worked for them, right? And maybe there are 10 other people who also moved at similar stage, not same but similar, and it also worked for them as well, right? What are some of those examples that you can share?
Yeah. So for founders who are, let's say, starting off the company in India and they're
Mm,
targeting for the US, I'd say one of the most important things we've seen the success factor is companies that are solely focused on the US market are
mm,
much more likely to crack the US market. And doing that super early, that's very critical. So companies that are trying to crack multiple markets, that is one thing that does not work well in our experience. Maybe it can. And again, this is more and more you move towards larger deals, more enterprise, the more true it is. If you're maybe building a developer-centric product, maybe it could be a little bit different. But if we're doing any sales-led motion,
mm,
a lot of those companies look very different. And being focused on one market becomes really important. So if that market is US, then you have to be focused on the US. And then when to move is I think of the move as it's not a binary 0-1, but for many founders we work with, it's been a journey, literally and figuratively, where they are going back and forth quite a bit in the early days between India and US. So it's hard to tell sometimes, are they based here or are they in India? Because, they craft sometime they're in India some other time, and they're continuously moving back and forth. Let's say start with a very strong market discovery. A lot of that can actually be done online these days with just reaching out and being creative and making, getting some friends and supporters in the ecosystem, and then they introduce you to more people. Once you do that, I think it makes sense to start traveling quite a bit to the US, because there's nothing like being close to the customer, and it generates a lot of virtuous loops of momentum in the company in the early days. Let's say, so let's take it by phase. So let's say there's the initial market discovery phase. Perhaps you can do that remotely. Perhaps you visit, if you have that ability to do that, you visit the US and you try and meet some of these prospects in person. And that often gives you a much richer set of data points. Then you take the product build phase. Now, let's say you've done some market discovery, you're building out the product. Product is not being built in a vacuum. You are still sort of maybe taking an MVP to the customer, getting the feedback, and then again iterating on it, adding more features. So often what we've seen is the model that works well if there's multiple founders. One founder that's focused on GTM in the US, go to market, and one founder that's focused on product and tech. And there could be multiple founders, but let's for simplicity say there's two founders, and one is focused on tech and product, and they can spend predominantly most of their time building out the team and the product in India or wherever it is. And the one that's focused on GTM, that founder typically starts to travel very frequently to the US if they're not already here. So that's one model we've seen work well. And often these are founders who may have worked together in the past, or they have history, they have a level of working relationship and trust, and so that they can communicate very seamlessly back and forth. Because otherwise, the difference that happens, or the issue that can come up, is you're collecting all this feedback from customers real time from the market in the early days, and you need to now transmit that back to the product team and iterate on that quickly. So that configuration works well. And then comes let's say the go-to-market build-out phase, where now you need to maybe hire some folks focused on sales and marketing, potentially in the US, potentially in India. And now you're actively in sales mode. Maybe you had a few design partners in the previous phase. Now you're trying to generate a lot more leads. That phase, I think you just have to be much more in the US, whether it is by just having moved here or you're spending a significant amount of time. At least one founder is spending a significant amount of time. And you've seen that that's a major success factor for companies that have done that, where the founder moved here fairly early or was spending most of their time here fairly early. Those have been much more likely to succeed versus the ones that didn't. And let's say there's three reasons for it. There's three virtuous loops that happen when a founder moves here. One is just on the customer side. It's hard enough as a startup going into a large enterprise and saying, hey, look, buy my product versus all these big names that you already have a lot of products from. But now if you say, not only am I a new startup, I'm also based 10,000 miles away, 15,000 kilometers away, and now buy a product from me, and I'm only available till 11 a.m. Pacific time to talk to you, or whatever it is. That just gets, just becomes really distant. So customer has to feel that you're locally, even if you're available time zone wise. But if you're here locally, it just generates a lot of those loops where customers are just much more likely to work with you if they feel you're here. And also in person, you just generate more, if you're meeting those customers, that generates more conversations, more referrals, more recall, more effect, word of mouth. So that's one on the customer side. Second is employees. When you're trying to hire, let's say, first sales hire, first marketing hire in the US, just imagine you're trying to compete with thousands, if not tens of thousands of companies for hiring that talent. Why would the best salesperson want to work for a founder who's remote, who's not even in the country? It just gets harder. So it's always hard to hire the first sales or marketing person, but it becomes doubly hard to hire a great person when you are remote. So again, it really helps there in terms of the quality of talent and being able to build that team quickly. And the third is around investors. And we've seen a lot of that where, we do invest in founders who are based in India at the time we invest, but then many other value investors don't, especially the ones that come after us. They may take a lot of meetings. They will talk to these companies. They're interested if they like the founder and the market. but we've seen many data points around this that they're just much more likely to invest, especially the US-centric investors, when the founder is here and they have a few team members here, they have some customers here. At that point, this becomes a much stronger case versus if they're not here. That's it. Yeah, a good time to start visiting the US is, when you're starting the company pretty much. And by
Right.
the time you're looking to hire people here, build out go-to-market, generally it just really benefits if one of the founders is here.
Got it. Got it. Wow, that's like a lot of insights packed into a very short monologue, but interesting. And switching gears a little bit ahead, right? When now the founders are there, right? Like now somebody has moved to the US, right? And I think this is something you mentioned in the previous topic as well, that once you're there, you just don't have to be limiting yourself to talking to just the Indian pre-Indian founders who have moved there like 10, 15 years ago and now have scaled and has built a company, and now you are a startup. Now you're going there and you just have to limit yourself to selling to just those founders, right? Like just those Indian founders who was based in the US, because obviously it's an Indian connection, so it's easy for you to get an intro, have a chat with them, right? Like how do you navigate in this case? Like how do you navigate also talking to like local or outside Indian community, right? I would say founder community, and learn from their things, and how do you network and how do you reach out to these people, right? So what are your learnings in that sense?
Yeah, absolutely. So, one good thing that has really happened in the last 5 years is the US India founder community has become really strong, which
Right.
is one because a lot of learnings, a lot of events going on, there's a lot of mentoring that comes out of it, a lot of folks helping others like them who are a couple of years after them.
Mm.
Uh, I think one thing that comes with it, which you alluded to, is that the trap of just sticking to that community, and that can be actually that can work. It's a great, I think, way to find your first 5, 10 customers, advisors, a lot of advice, a lot of learnings, but also at the same time, I advise founders to also build, just networks locally here with folks that are
Mm.
building companies in San Francisco or the US, and learn from what they're doing, because that exposes you to some different ways. And we see some of these patterns of founders in the US India corridor. They build companies a certain way, and there are
Mm.
certain ways companies are built in the US. And sometimes there are differences. Sometimes there's best. So you can get best of both the worlds if you're participating in both communities.
Mm.
And one way to do that is, there's a lot of very sector specific. Let's say you're doing something in DevOps or something in, applying AI to LLM tooling or whatever. You can apply multiple further filters to it, and you'll find a community in the Bay Area or San Francisco around that is doing events, and there's founders within that who are mentoring each other. So find some of those and hang out in those networks and learn from each
Mm.
other's, mistakes and successes, and do that at the same time as you are doing that with the US India community. So that
Mm.
expands your both horizon as a founder, and you learn from, doing things, let's say in the lean way. That's one big difference that we with pure US companies and US India companies is the US centric companies by necessity tend to be very lean, and they
Mm.
will have 5 people, even with seed funding. By the time they're going to Series A, they may still have single digit number of people,
Mm.
which would look very different for US India companies. Let's say, yeah, it's important to pick up some of those practices. And also, I think it expands your network as you're looking at hires, advisors, customers. You want to obviously tap into broader networks, and that's how your startup becomes more scalable. Because if you just
Right.
look at one segment, you may get your first 5, 7 customers from that community, but then, if you have not expanded your network by then you all of a sudden you're now looking at sort of this pure cold outreach to a lot of others, which also can work, but it helps to have a few other communities you're a part of.
Mm. Mm. No, that makes sense, and I'm sure uh like people might know as well, and I will definitely link a few links to communities where you can find like other founders and all in the description. But I've seen like there's just so many things happening in the Bay Area like at one time, right? Doesn't matter what category or what sector you belong to. At least in a month, there are like minimum like 10 to 15 events that are happening where you can go and just be there. And once you are there, like obviously, like if you are too introverted and can't go and talk to people, like if you just go and stand there, I'm sure like people will come and talk to you, right? Like I've seen that like it's a very extroverted like ecosystem in general, right? Like they'll just suck everybody in and they'll just make them feel natural. That's great. But yeah, and next talking about like now you're there, like so talking some things which will actually impact your bottom line, right? So obviously you want to target North America region, you want to target the US, and the major reason what like the companies do that is because obviously your ACVs are higher there, right? Like you're trying to sell to the same kind of company with same setup in India versus something somewhere in Southeast Asia versus somewhere in EMEA versus somewhere in US. And if you like take average of that, the US ACVs will always be off the charts, right? So uh like how do you in this case, like now you're there, like you have networking with people, you have set up a base and you're targeting US companies. So how do you build that confidence in charging like 3x 4x 5x sometimes 10x the amount that you're selling, right? So because you don't want to lose the deal, right? Like it's a good logo, you're talking to them. It's probably like your first, 5, 10, 15 deals in the US, and you don't want to lose them. But how do you balance that? Like, hey, I want a good price as well, and I want to win them as well, right? So, how do you build that confidence?
Great question. Let's Pricing has different levels of importance depending on the customer segment. The more go towards enterprise, uh, if let's say going from SMB to mid market, SMB generally, of course, is much more price sensitive. Enterprises are also price sensitive, but a lot less than founders often assume. Especially, I'd say, India to US founders, in our experience, generally, been very conservative with pricing, and folks are often surprised what the customer might be willing to pay. And in fact, sometimes it could also be that underpricing could be an issue because there's a perception of value based on
Right.
how you're. If your competitors are, quoting 250K annual deals or something, and you go in with a 50K or 100K, there's this assumption that, hey, this is just a cheap knockoff, and it may not have all the features, or it may not really actually work that well, even though you may be actually offering a better solution, which is more, let's say, AI powered or whatever it is. So you have to actually price somewhere in the ballpark, but the edges just be comfortable going higher rather than lower in the beginning. And, you can always discount if you find that price is the only concern. But I'd say uh, focusing much more on the value and how your product is differentiated, and finding those believers in the early days who are actually willing to pay even higher than market,
Mm.
especially if you're trying to do something innovative. There's two different distinct plays, right? I'd say I'm focusing more here on, let's say, category creation, or someone that's disrupting an existing category with a much more innovative product. There's also a price leader type play where you can go in an established category, red ocean type market, where you're going with a much lower price and trying to go after large market size. So I'm talking more about the former here, which is, again, more innovative product. Hopefully, you're delivering much more value than other alternatives today, or maybe there are no alternatives today. In that, you're generally pricing, I've seen 90 to 95 out of 100 founders are actually underpricing today when they go out into the enterprise. And we're always encouraging folks to try higher pricing, and in most cases, it actually works out. The issue when they're not buying, you may still find customers that are not buying, or in both directions, but often the reason is something else. If everything else is fine, they love your product, they're okay buying from a startup, they are a believer, you found the champion. The pricing itself is often surprisingly elastic at that point. So I'd say just experiment with pricing, look at the comps, obviously, try and get a sense from the customers that you're talking to, doing market discovery. So again, I'd go back to that market discovery point as well. In the early phase, when you're doing market discovery, even before building,
Right.
so you're not offering something at this point, you're not telling them a price, you're just trying to ask from them, hey, what are you paying today to solve this? What does it look like? How many people are employed on this? How many tools you have? So you're trying to get a sense of what they're spending. And then you link how you price to that. And then if there's already competition in the market, then of course you have to have that data point in mind. But don't go in saying half the competition's price, unless that is your main strategy.
Right. Right. No, that makes sense. And any like pointers or any uh I don't want to use the word tricks, but any tricks that you are aware of to find what is your competitor charging, right? Because you mentioned you want to land in the ballpark, right? And I'm sure like even like you already have a existing competitor which is probably like 4x, 5x, at least 4x, 5x bigger than you, which is already like an US company with where which you're going up against. So they already have those 200, 250K, 300K deals. So, but how do you find like what they're charging? Like any inputs that you've seen that work there generally?
Yeah. I think so it's just hustling and finding cuddlebutt. I think sometimes you can
Mm,
find on this online, but very rarely. Often is the speaking with customers. Some will tell you directly. Sometimes if you get, they like what you're doing and they are interested. So not
mm,
in the first conversation maybe, but by second or third conversation, if they're really excited about what you're doing, there's ways to try out some of that information on, hey, what are you currently paying, or what price quotes have you gotten? Where would be the ballpark of that? Because, once they have started to think of themselves as the champion for you, they are also somewhat on your side. So if you're selling into the
mm,
enterprise, let's say you're selling to the director of DevOps or whatever it is, right? Now they have to go make a case internally to their boss and to the finance team and the procurement team. And once they like your product a lot and they think that it can help them do their job better, they are starting to come on your sites. They may not reveal exact pricing, but they would share with you that, hey, if you price it, we're getting quotes in the 200K range. So if you were somewhere within that ballpark, we would be okay. I could make a case for that. Something like that, they may say, right? So I'd say build a relationship with those prospects that have resonance with what you're doing. And that's where, again, being here in person sometimes helps you take them out for a, drink or a coffee or a lunch or whatever. And then also, advisors and folks in
mm,
the industry who know your segment well. It's a related point here that I'll bring it here now that to one success factor we've seen for founders, especially moving from India to here, that works well is find those first 5 to 10 believers. And it could be customers, but often people who are maybe like advisors or more senior people in your industry who
mm,
you get connected to. And often we help our founders we are partnered with do that, find their first 5, 10 ports of call here who really sort of start believing in you. You'll have to maybe take 10, 20 meetings to get to those 3 to 5 to 10.
mm,
But the people who may know your industry, they may know your competition, they maybe have been in your shoes, they've been founders, some of them have been founders before. And
mm,
they can also often help because they're talking to customers and your competitors potentially, and they know what the pricing is. And then third, maybe the founder network that I was mentioning to find other founders who are selling in adjacent segments, and they would know often what is the pricing for, deployment like this from those other competitors. Let's
right.
say just hanging around the right networks, building some deep relationships with advisors, customers, other founders could help there.
Mm, right. Interesting points. I'm sure that would help people who are figuring that out, right? Because it's always a challenge. And as you said, you don't want to quote too low and be perceived as a cheap alternative. That's the last thing you want to do. But as you mentioned, right, like getting those first 10, 15 believers, right, which will also like help you, and this would go into the next challenge, right, like, or mistakes that founders do, is assume that once you have a PMF in India, right, like you have a PMF in the US as well, right, but that's usually not true, right? So why is not true? Like maybe we'll start with that, and also um like how do you determine PMF very specifically for US, right, as a region, and not copy paste the same strategies or the same way you got PMS in India, like copy that and come to the US and paste it, right? So why does that not?
Yeah. So interestingly, what we found is for enterprise type sales motions, uh, having India product market fit can almost be counter predictive of product market fit in the US. So companies that go further along in India first, it's actually harder to find PMF here, especially in the early stages. There's maybe a playbook where it's a more mature company, you have a lot of resources, and then you come to the US. But if you are going to build for the US, generally finding PMF here first is much better And the analogy I'll give is that's, so finding PMF in a highly competitive segment in today's world, in the venture space, it's like playing at the Olympics and going for gold. And,
Mm,
trying to get PMF in both India and US, it's like trying to get a gold in both badminton and tennis. They're both sort of played on courts and they both have rackets.
yeah.
They're just different sports.
Mm,
And if you trained first to get a gold in badminton and you got it, and now you're saying that, hey, I'm going to play the same game and come play tennis with that same, you're actually going to be less likely than if you had started early on with playing tennis. So it's a little bit of the same. Customers are just different. Messaging is different. Your website looks different.
mm,
Your people, the DNA of the team, how you serve, a lot of things are different. And some of these could vary by segment. So there are some segments where the differences are less. If you're selling to, let's say, other tech-first startups, or you're selling to developers, it may be slightly different. But if you're selling into enterprises, especially if we're trying to go after this more brick and mortar type, classic enterprise, or even mid-market, those could look very different because one, at the risk of overgeneralization, I'd say one common theme we see is customers or products often here that work well from startups are very sharp wedge type products,
mm,
whereas in India, often and that's because people here may have already bought a lot of tools. So let's say you're building something in the sales tooling, they already have the CRM, they already have a lot of, let's say, call recording type tools, they have forecasting tools, and now you have to sort of see where you fit in, and you go with a very
mm,
specific. You go to customers in India, there may be some like that who are as sophisticated as here, but that's a small number. But the larger number there is customers who maybe haven't adopted some of the previous tools, and they also often want more solutions rather than products. They may say, hey, you have to do it for me. And so you build your product in that way, where you're sort of building a broader product. Maybe it's a platform and you have some services type thing thrown in
mm,
or some offering. Whereas if you come here and it's a very different form factor that's going to work, and your messaging is going to be different, your product features are going to be different, and now you already architected your product. So I'd say it gets really hard to port the PMF, and we've seen this firsthand in both directions. Companies that have tried US PMF with the same product and messaging as India, and then
mm,
having had to like undo a lot of things, then you start with a beginner's mindset to do that, which also that's another aspect of why it's hard. Let's say you get to PMF in India, you built out a team of 30, 40, 50 people. You have people in sales and marketing. Now you become a manager of managers as a founder. You're managing people who are managing people, right? And you're used to a certain cadence now. And now you have to find PMF in the US. Finding PMF requires extreme amount of hustle. And again, that beginner's mindset where the founder is driving that. You can't delegate it. You can't say that, hey, now I'm going to just go hire a few people in the US and they'll just sell my same product in the US or
mm,
slightly different in the US. That doesn't work. You just have to start again. You've climbed all this tree, you have to get down and climb the other tree. So you can't be on top of that tree and doing it from there. So as long as you're doing that, you have to, restart. So again, that's
mm.
another why it doesn't port.
Nice, nice. I think very, very interesting insight and very good analogy of, two sports like badminton and tennis, right? Like contextually it's the same, but two very different sports, and you cannot be like, aiming for getting gold in both, in all aspects. But yeah, I know we're reaching at our time, so I would like to like switch to the next section of the episodes. But before that, just recapping like the four mistakes that or four common challenges that founders do or think that we spoke about. Number one is not spending enough time in the US. Number two is like talking to only Indian US based founders. And number three is like thinking you're quoting too less, probably like quote high, and then you can negotiate down. And number four is we just talked about like, hey, you cannot like, just copy paste your India PMF to the US. Right. So again, thanks for sharing those insights, Anupam, and moving on to the lightning round. So like 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 the previous round, I will also like ask you a bunch of questions, like three, to be precise, but not related to any of the topic that we discussed before. So, and you have to just answer like whatever is on top of your mind, right? So, are you ready?
Sure.
Great. So, yeah, the first one then, what's the one thing that has helped you shorten your learning curve?
I have to say all the AI tools. I'm on all of the ChatGPT, Claude, Perplexity, and the learning
Nice.
speed has just gone up tremendously.
Hmm.
Maybe YouTube and other things over the last year.
Nice. Nice. And second one, right? Like, what do you know about your work now that you wish you would have known when you first started?
I think it's always a journey of learning. Everyone says this, but it's all about the team and the founders, and I'd say even more importantly, more than the logos and brand names on the resume, much more about the underlying software qualities of the founders and how to grow themselves over time, which is something I've just learned firsthand as an investor over many, many years now.
Nice. Nice. And the third and the last one. So, what did your biggest professional failure teach you?
Yeah, it's always when you partner with founders, there's extremely high amount of excitement about each. We do relatively few investments where we partner deeply. So each company that we work in is as if we are sort of working in that company as our main thing. And
Hmm.
whenever failure, whether it's a temporary failure like not being able to raise a round or losing some customers or something, or something more bigger than that, I'd say, yeah, it's a big learning. And then, yeah, it's always about introspecting on was the, one part is that this failure is just a part of doing startups. One way to think about it is that. But then every time there's a learning with each of those events on what could have been done differently in that scenario. And that's what makes us, smarter, hopefully.
Nice. Nice. Awesome. I think good insights, and I think it was a great conversation, Anupam. Thanks a lot for coming on the show and sharing all these insights. I'm sure there are as we discussed before, there are so many challenges and common pitfalls that founders get into. And I'm sure like at least these four ones that we discussed on the episode, if everybody who's listening, they will try to avoid those and learn from your experience.
Great. Thank you, Sunil. Great discussion and great questions. Appreciate the opportunity.